All right, guys, what is happening with the housing market here in Arizona? Phoenix, Arizona, to be specific, guys. Why? This is Everything Phoenix. We are live here. It is Monday around lunchtime. Hope you guys are doing great. We're going to talk about the housing market. What is going on with demand? When is it going to get better? We're going to look at all these things, plus a couple of topics of what's happening around the local economy. And we're going to go from there. Guys, I heard from an economist here, local economist here, that was not the Cromford report, actually, just recently, just like about a week ago, in that multifamily, okay, and these are housing units, we are oversubscribed by quite a bit right now, right? There's a lot of developments that are brand new, ground up construction here in the Scottsdale area, Phoenix area, Scottsdale especially, right? A lot of the homeowners don't like it, but there's a lot of that going on. Why? Because everybody wants to live in Phoenix. We have a lot of good migration. In fact, we're going to talk about net migration on this show here in just a little bit as well, so stay tuned for that. Where do we lie for net migration, positive, negative, or how much or how less is it? Stay tuned for that. But they said that by quarter one, even with all of the extra supply that we have on the market by quarter one of next year, that demand will rise to meet the overabundance of supply we have right now in the current multifamily space. So you're going to see now leasing a lot, probably around town for 2025. And again, most of these are lease units, not units you can buy, although there are some of those and more coming down the pike. Why are they not stopping then to build if they're oversupplied right now? Well, it's because they know what's coming down the pike. Matter of fact, you got several multifamily home builders that are buying land, buying projects now to hopefully be able to deliver to the Phoenix marketplace in 2027 and beyond, because the future looks very bright. Okay, so here we go. Taylor, what's up, man? Please talk about monthly appreciation versus annual appreciation. Okay, we're going to hit that. I don't have it up on the screen, but I can pull it up because we can pivot here, right? Let's pivot and talk about that here in just a second. But first, guys, we've got to give you the foundational underlying aspect of the housing market today in Phoenix. In fact, you're going to see right here that that Cromford has it at 82.2. That is clearly a buyer's market. Okay, so we are below 90 to 110 is balanced, and we are below that right now. Currently, we are at 82.2. That is not good, my friends. Now, it depends what side of the coin you're on, right? It's good if you are a buyer. I'm going to repeat that. It's good if you are looking to possibly buy. Guys, it's 82.2. You are in a solid buyer's market. Now, across the Phoenix area, there are certain areas that are doing better than others. Naturally, of course, we're going to hit that next. But overall, it's a buyer's market, guys. Now, before I show you that graph, let's talk about really quick, what does a buyer's market mean? What does it mean to have some advantage on leverage to be able to get a good deal? What's a good deal look like in a real estate transaction? Well, I can tell you right now, it's not always the amount of money off the price, right? It is not. It could mean a lot of different things. There are a lot of terms in a contract. Guys, the purchase contract in Arizona is 9 pages plus a bunch of addendums. So there are a lot of different terms in the contract that potentially might mean something more to you or not. Price is obviously a big one. But just because you only got 5,000, 10,000, 20,000 or whatever off the asking price, maybe it's a higher price point, you got 50,000, maybe 100,000 is definitely possible in today's market. We've had a couple of those happen recently. But does that mean if you only get 5, 10, you want a 20 off the asking price, it's a bad deal? No, it doesn't necessarily if you got the terms you wanted. Now, see what's happening a lot of times in 2021, 22 is that people couldn't get any terms. Why? Because there's a multiple counter offer situation. They're to compete. And when you have to compete, kind of what you want to do goes out the window, unfortunately, unless you just hold tight and hope that it all works out for the best. But if you have a good agent, they should be able to ask open-ended questions. And even though they might not be able to find out exactly where the competing offer lies, they'll be able to bracket it a little bit and figure out where you might need to be. Okay. But it comes with experience. It comes with relationships. Taylor is a great agent as well. He knows how to do this just as well as, the top 5%, let's call it, of real estate agents across Maricopa County. And I am going to be a little biased here, but we are too. So we're going to throw our hat in the ring on that one too, as top 5%. Okay. That knows how to get the job done. And relationships with other agents across the valley are paramount for your agent to have. Okay. Now, let's get off that real quick and talk about the Cromford report. Let's talk about the different areas. I want to show this graph. You guys seen it before. We're going to talk about it just briefly and then go into something else really quick after this, okay? but it is a buyer's market. Again, you saw right here, it's 82.2. Below 90 is a buyer's market, but it's not necessarily a buyer's market everywhere across Phoenix. Chandler, it definitely is not. It's 141. It's still a seller's market, although it is decreasing week over week. Okay. You can see where it was last month, actually, in this situation. Okay. Then you have Scottsdale, it is decreasing, but these are still sellers markets. Okay. Now, under 110 is a balanced market. So the top 7 are still technically sellers markets, right? Now, Phoenix is big. Scottsdale is big. Gilbert is huge, right? And so on and so forth. So the neighborhood, the zip code, that matters. A good real estate agent, someone in your corner, can pull that specific niche data and they can give it to you exactly so you know what you're looking like before you make an offer. Guys, a big metric to pay attention to is the average list to sell price ratio. Okay. What are the average homes selling in this neighborhood selling for off the asking price? It gives you kind of an expectation level to know where to possibly be. Okay. Now, look at all the ones, guys, in a buyer's market, guys. Poria 92. Wow. It's a balanced market technically, but it's on the cusp. Okay. And look at the bottom 5. Holy cow, guys. If you want to buy a house and have all kinds of leverage and get a good deal, Maricopa, that's going to be your place. Where is that, by the way? Well, here's a map of Peoria. Let's zoom out here. All right. I had Peoria teed up for something else. Peoria is a great place to buy a house. Northwest Valley. Okay. Maricopa, right here. So you're detached a little bit from the MSA Phoenix area. Okay. But not by much. 347 goes quickly and you're down in Maricopa and you have all kinds of negotiating room to buy a house down there. Okay. So that is that. Now let's go back to here and talk about what I came to really hammer on here a little bit here today. Look what's in blue, guys. Here we go. While we have seen the 30-year mortgage rate drop from over 7% to around 6.7 to 6.8, this does not appear to have created a lot of new demand. This is the problem, at least for Phoenix, right? We're talking Phoenix. Listings under contract, i.e. listings that are selling, have been tracking pretty close to last year's numbers. This is far from good. The last time we had listings under contract below current levels in early March, which is a really good time for the marketplace in Phoenix, was the year 2008. Wow, look at this. I mean, I don't know how you put it any more clear, guys. 2008 was an awful year, right? It was a great recession, the start of it. At least 2025 is not nearly that bad. That's the good thing to keep in mind, guys. It's not the same. The fundamentals are not the same. If we could see another 0.5 off interest rates, then it would be reasonable to expect a more significant recovery in demand. Okay, let's talk about that for a second. All right. What is happening with interest rates right now? Interest rates are coming down. You saw that. They're going to be around 6.7, 6.8. I'm going to pull up the graph here and show you what they are today and where they're trending right now. But how does 2008 compare to 2025? Completely different in terms of no black swan event out there in the horizon that's happening that we can see. Now, one could argue tariffs. Tariffs could be, and you could be right. No one has a crystal ball to know. But there's also this thesis out there. All right, this ethos, if that's the right word, right? That from a macro standpoint, the White House is currently trying to have, currently for at least temporarily for a period of time, the stock market continue to slide. When the stock market slides, the yields will slide on the bond market, and then the rates will come down to try to help combat and stimulate the marketplace. Okay, if rates come down a little bit, half point, you saw what could happen. That'd be reasonable to expect a more significant recovery in demand for Phoenix. If they come down to 0.5% across America, same would apply. Some more than others. What if they come down a point? Point would well, it's still 6%, Kelly. It's still 5 and 7/8. It's not terrible. That's not great. I mean, yeah, but it's not great. But that would move the needle. And supposedly there's a large payment coming on national debt this year. I'm not sure when. I should have probably looked it up in the headache for you guys. My apologies. You can look it up yourself. And apparently, if you have a lower rate, you can refinance the debt payments, because one thing America does not want to do is default on our payments for our national debt. So what if they could refinance a big portion of the debt, or maybe all of it? I'm not sure how that all works. That's above my level. All right. And if you did, would that change the ability to have less debt, at least in terms of the payment outstanding? And therefore, that could signal a good sign to the market, stock market. Therefore, all the companies that are having good earnings right now, I can name several right now, but are still getting crushed. All of a sudden, boom, rebound a little bit. Could happen. Now, this is not a political show, as you guys said multiple times. I don't know if it's good, it's bad. You can decide that yourself. But there's this thesis out there that that is what's happening, and it's somewhat, calculated to make sure it happens so you can refinance the national debt, get rates down a little bit, and then have hopefully at some point later on this year, maybe in 2026, the market rebound strongly because the demographics would tell us that it will. Okay, demographics data will tell us that it will. Not my opinion. Okay, black and white data, which I share all the time on this channel, and it's primarily about Phoenix. Now let's share my screen and go back to this. Okay, what? Oh, Rick, how you doing? Peoria still seems overvalued in my opinion. Well, let's go back to here. You can see Peoria is at 92.4. It's down 5%. And yes, in some cases it could be, guys. You know what's probably overvalued the most, in my opinion, Rick? I don't necessarily disagree with you. That'd be the luxury home market, guys. Peoria does have luxury. Now the luxury looks different than Paradise Valley or Scottsdale, but it does have some luxury properties. Up in West Wing Mountain, for example, Estancia, Blackstone, those are nice areas. Check them out. We can do a whole show on just these two areas in the real estate involved there. But it is still selling pretty good, pretty well. And so I think that is maybe a little bit overvalued. I think it's probably what you're talking about more so. But overall, the average $400,000, $500,000 house in Peoria is sitting unless it is actually remodeled really well and someone can bring a toothbrush and buy it for that convenience. And it's going to go pretty quick, right? That's kind of what we're seeing across the board in general, especially in Peoria. Okay, but thank you for bringing that up, Rick. I appreciate that. All right, now let's share my screen again and go back here. We talked about that. Now Peoria, by the way, Peoria was at 93.6. Now it's at 92, dropped 4 points. Okay. All right. Now let's go over here. Active listings, guys. We're talking about supply and listings under contract, right? Well, the supply continues to go up. Look at the home screen here. Supply is almost in the red. This is not good. It's always been somewhat in the green, all right, to an extent, but it's actually not in the red. Demand is even worse. Look at that, in the red. Why people are sitting around waiting for tariffs to take place. They're waiting for the economy to be a little more stable so they see the direction of where they're going. Guys, people's portfolios in the stock market are not doing well right now for the most part. So people are sitting around waiting. Demand is sitting and it's suffering because of that. Okay, so now go back to here, active listings, and you can see that in 2025, 24,764 properties, guys, and it has not curtailed. It has not gone flat or down yet. Wow, that's a lot. Look at last year, guys, 24. We were at 17,000. We're at 24 now, okay? In 23, we're at 14. And then, of course, the years of 21 and 22 were just silly, right? That's, the outliers, right? But look at 2014 and 17, and now we're at 24. It gives you leverage as a buyer, period, the end. Now, typically, you'll start seeing this supply start to curtail like this and go down as we head towards the summer, but it hasn't happened yet. And that's why Cromford Report is pulling out the information of 2008 in that listings continue to increase, but yet the demand is soft. Now, let's go over here. I'm going to show you this, guys. This is good. Okay. Nope. Mortgage rates barely budged despite a wild week. Mortgage rates right here, you can see, are at 6.8%. Okay. They are, as the article suggested, they are cruising around 6.7, 6.8, which is better than 7, so that's good. They're just not moving as much as everyone would like to see. Well, Yahoo Finance says mortgage rates barely budge despite a wild week for financial markets. Okay. Now, why is that? Well, for all the stuff that we're going to talk about, and kind of we already know, but it's the tariff, the retaliatory moves, the reciprocal tariffs that the government's trying to pass right now, and so on and so forth. But it creates volatility. And in that, mortgage rates have not gone down a lot, just a little bit. So I think, again, you're going to see more of this, honestly, in the next 2, 3, 4 weeks as we proceed. But stay tuned to Everything Phoenix here on YouTube because we'll continue to go over all that and monitor it for you. Okay. I apologize, guys. I'm a little in the weather today. Okay. If you haven't tell, my voice is a little, so I'm trying to do my best here to get through this and still show up, even though I don't feel the best. That's what I do here. Okay. So I appreciate you guys for logging in and taking your precious time to watch. Now, let's go back over here. This article, this is interesting, I think. Okay. Why, talking about supply, is the U.S. housing market short by nearly 4 million homes, guys? Again, not my statement. Research, we're short across America. 4 million homes. That's a lot. And to get the market kind of to be steady Eddie, we need supply and demand to be in balance, to be steady Eddie. Like we're like kind of was, 2012 through 2018, right? Those are six, for the most part, primarily pretty solid, regularly appreciating years, right? Nothing crazy, nothing bad, and that'd be great to continue to have that happen. Okay, all right. Hey, got another comment here. Thanks for piping in. I appreciate it. Here we go. All right, I don't want to mispronounce your name. And why is it not sticking? What's going on here, guys? There it is. Houses are too expensive. We hope everything will go downhill so we can afford anything. You know what? You're right. And guys, that's the number one thing we hear about the most with boots on the ground, meaning housing affordability is just out of whack. But here's the benefit. Okay. Well, let's talk about it here for a second, right? Okay. Could things get worse? They could. Okay. They could. I hate to be the bearer of that bad news, but they could. I'm going to shoot you straight here, guys. And if you look at the data, I think we have a little J curve, right? See, a J goes down, then a J goes up. I think a J curve here for 2025. I do. Maybe it's just the first half 25. Maybe it's the whole year. I don't know, but I think we have a J curve here where things will be reset a little bit. Now, remember, about 2 months ago on this show, we covered the external factors that no one talks about in terms of rate buy downs for sellers. But hold on, and inflation. Now, Cromford Report, their local economists of choice here in the Phoenix area for everybody. And what they did, they took those two factors into play. And what they said is that when you take in inflation, the increase, the rate of inflation, and what sellers are willing to give in terms of seller concessions, which could be for a rate buy down or other things, but seller concessions or credits in general, take those two things combined. Right now, we are at the same median home price in Phoenix, Arizona, across the board that we were equal to in 2022, June of 2000, or it was July of 2022. Okay, so let that sink in for a second. Are the prices higher when you go look at them on Redfin or Zillow or hopefully viewarizonahomesforsale.com, our website? Okay, which is even more accurate in my humble opinion. When you look at those things, are the prices higher for the same house, for the same size of house, same bedrooms? Yes, they are. They are higher. But if you take into consideration the inflation, what your dollar is worth then, where is today, okay, and where the seller concession amounts are, like I think the median seller concession rate in Maricopa County right now is just over $10,000 per deal, and back then it was zero. I mean, it probably can't say zero, but it's like 0.001 probably because there are multiple offers and everything, and everything was getting bid up. Okay, so if you've been given a time machine to go backwards in time and hopefully be able to buy something, even though the prices are still higher than when they were in 2022, this is it. Now, if the J curve is correct and eventually it goes up, then, I mean, look at it here. Let's go back to the article. Okay. Don't believe me. Believe the article or not, by your choice. But here's the data. Key takeaways. The supply of U.S. homes undershot demand by 3.8 million homes in 2024, according to Realtor.com report. The report showed that builders would take 7.5 years to catch up with demand as inventory struggles pressure home affordability. Okay, zoning rules are a big problem with that. Economists debated how to address making improvements to zoning and some changes to lead to higher long-term costs. Okay, or that has led to that. Excuse me. So zoning is a big problem. They're trying to get that changed and the process of doing that right. But guys, the U.S. housing market needs as many 3.8 million more homes to meet demands of home buyers in 2024 and for the next 7.5 years. Guys, let that sink in for a second. If that's true, which there's no reason not to be, but if that's true, even though, look at here, our active supply has increased. We're at 24,000 homes in Phoenix compared to where we are today. Do you think at some point, if that's true, this is going to curtail and it's going to be down here, and it's go down and down? Maybe it's 26, maybe it's 27, but it's going to curtail and be down here, right? And demand will continue to increase and go up this way, like my cursor is doing. And then when that happens, what happens to home prices? They go up. What happens to your ability to negotiate on the house you want to buy? They go down. So now, if the J curve scenario is correct, where you're dipping down here right now to be able to buy something that is still not on paper as cheap as it was in 2022, but given your current buying power, it might be, especially if rates come down more, you have more buying power. Could you possibly get in before it gets a little bit higher, guys? And what we're talking about right now is that you look at all the MBS, Bank of America, Fannie Mae, Freddie Mac, Morgan Stanley, they all have projections on the housing market, certain markets across America, and Phoenix is one of them. And they all say, all of them, have a positive appreciation rate for 2025, not even 26. Okay. But in all of them in 2026, I didn't see one for 27. All of them, except for Phoenix, in 26, they anticipate the average appreciation rate being higher in 2026 than in 25. So I'm going to pull this episode on St. Patrick's Day in 2025, a year from today, and we'll see if I'm right or wrong. But I don't even like saying I'm right or wrong because I'm just going off what the data says. Was the data right or was the data wrong? Could some things happen to change that outlook? Of course it could, right? Global things, yeah, absolutely could. But as of right now, this is where you stand with the best knowledge at your disposal. Now let's go one more thing here, okay? Median sales price. Now, Kelly, I teased you a little bit, but hold on. If you look at active listings, we're way up here. Normally we're here and here. So we have all this extra supply. So that means the prices must be going down, right? Because I mean, here's the you see right here. Here's the comp report. It's below 90. We're in a buyer's market. Prices have to be going down. Well, here's the data, guys. Annual median sales price as of March 1st this year. See the red right here? That is 2025, guys. And if you look at the red here, January 1 compared to here, March 1, did that go up or down? Well, let's pull the cursor over it. It was 445,500 in 25, January 1. March 1, it is 449,500. 449,500. It has gone up, guys. So even though we have increase of supply, even though we have demand in the red right here at 80.2, because it's kind of sloppy, for whatever reason, we have prices still continue to increase. Now, could this just be a lag? Absolutely, it could be, guys. This is a lag measure. There's no doubt about it, right? But the Quantum report doesn't pull this 3 months late. They pull it as of today. So it's not lagging by much, even though naturally it's kind of a lagging indicator in terms of the sales price. Why? Because homes go under contract and they sit in escrow maybe for 30 days until the lending gets done, title work gets done, then they close. Okay. And so if the ones going under contract are obviously a lot less than the ones that are high, less than one of the ones that are selling right here, right, and they're going down, then that will cause this to curtail. And I do anticipate that. I do. And I think you're going to see a drop off in the sales price here start to increase like it was last year, guys. Here's 23. I'm sorry, 23, not last year. 24 went up, right? 23, it did eventually kind of curtail on the way down. Didn't go down much, but it did curtail on the negative side. So I think there's another gift, guys. If this curtails into the next 2 months, 1 month, 2 months, 3 months, and especially if it keeps curtailing like 23 into July, where we know the market slows down because of the heat and school, people moving for school kind of already made their choices. They've already bought their houses and sold and whatever may be. Then July, August could be a dynamite time to buy a house. But it also could be a great time right today because what we know for sure is what we know today and not 1 month or 7 months into the future, okay? Although we're trying our best to predict that. Okay, Rick, here we go. Thanks again. Areas with greatest appreciation, like Phoenix and other cities in the USA, are likely to correct the most on a downturn, which we are in now. I would agree. The key, I think, Rick, is how long will that last and how deep will it go? No one knows that. So what are some things you could look at to say, okay, if that's the case, how long could it last? How deep could it go? Well, the number one thing to try to figure out if that could be the case is demand and supply. Well, we know typically the curve starts to curtail on supply. It doesn't keep going up. Trees don't grow to the heavens, right? It doesn't go up forever. It will curtail in terms of the amount of supply in Phoenix. That will be true at some point here in the next month or two. That's my prediction because it happens every year, okay? So if that's the case and demand stays kind of sloppy and low, maybe prices do come down because that would make sense. Even if supply goes down a little bit, but demand goes out at a higher rate, then obviously prices should and could drop. But what's the number one thing? Excuse me, guys. What's the number one thing that we could look at to see if that's going to be a long-standing trend? The local economy, job creation, population migration. I'm glad you guys asked. Rick, great question, because this leads me right to this point. Here we go. I brought an article teed up for you guys. International migration propels Maricopa County as a growth leader in 2024, census figures show. That's interesting. So the population's good in Maricopa County. Yes, it is. Where do we stand? I'm glad you guys asked. Here we go. Metro areas grew faster than any other places across the United States, of course, the cities, right? But here we go. Maricopa County, which is all of Phoenix pretty much, had the third largest numeric growth between July of 23 and July of 24, with 57,471 new residents in the county during that period, significantly more than the 30,000 people new residents from the previous annual period, guys. So we grew 27,000 new residents from the year prior, from 22 to 23, then in 23 to 24, guys. That is good. You need population migration, population growth for housing, right? And housing prices to sustain, okay? One note is the fact that Maricopa County growth was driven primarily by a net international influx, which we never had a lot of in the past, of 45,000 people, okay, to offset a domestic migration net loss of 1866. Now, I'm going to make the assumption that connect the dots here that the 1866 was a lot of local potential people that went back to Mexico or Central America that maybe were here not legally. I don't know. That's the assumption because we did lose some people from that situation over the past several months. Okay, could be wrong on that, but I'm making that assumption. Okay. Only Harris County, Texas, where Houston is located, and Miami-Dade County, Florida, we all know those two places, had larger numbers. Look at Miami, 105 and 64,000 in Houston, and we are at 57,000 in Maricopa County, right? So just with Maricopa County, the positive net international migration as a key driver for metro growth between 23 and 24. Nearly 2.7 million new metro populations were part of this trend, guys. This is good because we need this aspect. Now, Maricopa County is the fourth most populous county in the entire country. That's the Phoenix area, surpassed only by LA, Cook County, which is Chicago, and Harris County, which is Houston. All right. So, guys, this is really good stuff. Now, here's the other thing, guys. On this to the south of Maricopa County, okay, right down here, okay, is Pinal County, which is all this. Maricopa, the town of Maricopa is in Pinal County. Kind of confusing, I know. But all this down here is Pinal County. Okay, it's a big county. And guys, guess what? Yep, you guessed it. Maricopa County, we were number 3. Pinal County was number 5 in the country for percentage growth in the nation, right? That is cool. So we have all kinds of population, guys, going back to the map. Maricopa County, Seoul area, and Pinal County down here, growing like wildfire. Why? I'm glad you asked. Because of industry like Amcor. Industry like Amcor, which is a supplier to, you guessed it, TSMC. Kelly, when are you going to stop talking about TSMC? I don't know. I mean, when it becomes only irrelevant, guys, the amount of jobs and what's the last time, okay? Let me speak right to you guys. What's the last time you heard of a city? What is the last time you heard of a city in America that had a company, one company, put in $165 billion of investment into that city? I mean, I don't know of one. Maybe it exists. I don't know. So it is very significant, guys. 165 billion. And now what this is saying is suppliers like Amcor are very, very crucial to the American economy and definitely Arizona's. Why? Here's a rendering of the $2 billion manufacturing plant, packaging plant in Peoria. And what they do, guys, right now, they said that Amcor really is in charge of the packaging around these semiconductors and chips, et cetera, guys. And right now, all the packaging is done where? Asia, all of it, and pretty much all of it, right? So the Amcor is the only U.S. headquartered company providing outsourced semiconductor assembly and test services in high volume production. This will be a $2 billion factory. This will provide about 1,000 high-paying jobs. And for not just Arizona, but America's economy moving forward, this is going to be huge, guys. And it will reshape a lot of things around Arizona, guys. And if you want to know where that's looking to be, we're looking at right off the 303 loop in Peoria, right in this area, the north side of the 303, guys. Here's TSMC right here, where that little North Gateway is, right in that area. That's TSMC. So the supplier along the new route of the State Route 303 makes it nice and easy to access right into TSMC and supply them everything they possibly need. And for Intel's in South Chandler, guys. Let's zoom out. Just make sure you guys, if you don't know about that, Intel is down here in South Chandler, okay? Intel headquarters right here, right by where it says Ocotillo, right in the area is where the headquarters of Intel, guys. So we're talking the Phoenix area poised for big-time jobs, high-paying jobs in the next year, 5, 10, 15, as this all gets built out, okay? Rick, here we go. What's going on? I agree with you. If you plan to buy this year, then I will do it this summer. Love it, Rick. Take action. Because again, what I always say too, and this is not to be flippant, but the reality is when's the last time you heard anyone say, you know, that house I bought 10 years ago? Shouldn't have done it. Lost a lot of money on that one. 10 years, 7 years, that's an economic cycle. Yeah, maybe 5 years. Yeah, 2 years, 3 years. Oh yeah, of course. But 10 years. So if your outlook is 10 years or longer, it's going to be hard to lose on that deal. It's going to be hard, especially when you have principal payment reduction, i.e., you're paying to live there, or maybe a rental, either way, over time. So, and then we can go into a whole video diatribe about the benefits of home ownership. We won't do that for this time. Okay, here we go. Retired journalists, this is fantastic news. Drive down those record prices. Yes, let's go, guys. I'm all for it. I've heard people, haters out there. Hey, Kelly, you're a realtor. You don't want this to happen. No. I'm like, no. I do, because guess what? My best years, okay, were in the Great Recession, 2008 to 2011. Why? In terms of making money, no, it wasn't. But guess what that did, guys? Having a long-term perspective on my business, my personal career, my industry, that drove me to where I am today. Why? Because all those people I helped get out of the mess they were in, and selling for low prices, the people I helped get out, and the people that bought in at that market time that now have just kudos and kudos, boatloads of equity, right? I kept in touch with them. I serviced them, I provide value for them. And now when they look to sell and buy, they have tons of equity. They can do that, buy a bigger house, they can stay, whatever they want to do, but they have options. And so helping people in the worst times or in the good times if you're a buyer was one of the best things that ever happened to me in my career. Being around that time, being licensed to help was phenomenal. So guys, if prices come down, I'm good. I'm good. I want to help as many people as possible because I know it's all cyclical and it will come back right back up over time. Okay. Fantastic news. No question mark. LOL. Okay, good. All right. Awesome. Thank you, retired journalists. And who are you a journalist for? I'm curious, right? But thank you for your service on that. All right, guys, I'm almost done. We're gonna get out of here, but let me just wrap this up here because I had a couple more things here just for you really fast. Speaking of which, Amcor, TSMC, sorry guys, home builders buy 600 lots in Peoria master plan community. Guys, this is called Saddleback, and it is going to be gorgeous. Saddleback, 600 lots, guys. Two of the builders that we have the best relationships with, Camelot and Taylor Morrison, are two of the three builders. Lennar, we have a good relationship with there with some builders, some people there as well. But there are three builders overall that are going to be taking the realm on this, guys. Here is the area, right in the Saddleback area, just south of the 74. So, guys, if I pull Peoria back up, you're seeing there's a 74. Let me zoom in. You guys can get an idea. TSMC is right over here by this North Gateway area. We're talking right in here. Some gorgeous real estate, guys. You look at the picture right here. This guy for Land Advisor says it's the most beautiful piece of raw land he's seen since Scottsdale. Look at that. They're going to develop that. And this one will be 600 lots, but they're going to have other developments right around there touching that over time. And it sets up perfectly for supplying the people who will be employed at TSMC, Amcor, and all the suppliers that will be working in this area over the next 10 to 15 years. Guys, it's a phenomenal time to be a home buyer, in my opinion. Listen, I'm all about trying to time the bottom of the market. I don't know if it's impossible to do that. Let's just be real with that. But you got to jump in the game at some point, right? So this could be a good year overall. Okay, last but not least, you may have heard about this, guys. This park condominium project in Scottsdale is luxury on steroids. This is going to be happening. I got the map pulled up, so let me just go from, speaking of luxury in Peoria, good piece of land in Scottsdale. Here we go, guys. This is prime time, baby. This is Scottsdale Road right down Broadway here, going north-south. And right in here is where the park is going, okay? Right here, where it says the big P, right there. That's the old Cracker Jacks deal. And let me hit the layer map for you. So you can see, guys, right there, that big piece of brown land right there. If you have the ability to afford a luxury condo, or maybe you're in town, you want to visit at a hotel, luxury hotel, that's going to be part of this room as well. Or maybe you want to rent. There's 89 units or apartments. There's 70 units for condos you can buy. And there is a hotel, retail space, restaurant space. And they are calling it the park because they are, with a QUE, right, the French old deal, because they are modeling it after a Central Park in New York City. So right in the middle of this whole thing is going to be a park that's going to be modeled after New York City's Central Park. So pretty cool. That's coming down the pike, and that's moving along. And then Arizona sets record for new solar capacity. I could do a whole video. I have some videos on my channel about solar in Arizona. You can check that out. And then last but not least, guys, the future of travel, air travel. Honeywell, located right here in Arizona, are talking about working with this German company for air taxis. That's a 7-seater right there that can take off and put you down wherever you want. And it's all electric. Interesting, right? But nonetheless, that's what we have going on today. 35 years as a retired journalist. Awesome. Thank you so much. Thank you for watching the show. Really appreciate that. Hopefully, as someone who's reporting data and news, I'm doing an okay job. You can always reach out to me, guys, at 480-660-5974, or just DM me or comment here on the video on YouTube, and I'll be sure to reply back to you if I can help you out any way possible. Rick, you as well. This summer, I got you if you need some help or want some help, if you don't already have a real estate advisor of choice that you prefer. Thank you guys, as always, for watching, and until next week, keep it classy, Phoenix.